I've become quite bullish on copper. I wanted to share this with you and get your thoughts, see if you're going to poke holes in my thesis and tell me I'm early, I'm late, whatever.
What happens at the beginning of the cycle is you can buy the copper gold port-free companies and copper stocks a lot cheaper on a cash flow multiple basis than the gold stocks. But at the end of the cycle, when everyone's just hurting in here, they go to the same multiple. So actually you can make more money on a copper gold deposit than you're going to make on just a pure gold producer.
Buddy, my name is Jay Martin. I am an investor and the CEO of Cambridge House. Now, everything I do on this channel is done in the pursuit of improving my portfolio. Let's do it.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, my next guest is the CEO of US Global Investors, one of my favorite people, Mr. Frank Holmes. Enjoy. What's up, guys? Jay Martin here, CEO of Cambridge House, and I'm joined by the CEO of US Global Investors, Frank Holmes. Frank, how you doing?
Outstanding, my friend.
Good to hear. It's great to have you back. The most challenging thing, Frank, about interviewing you is that I always show up with like 12 things that I want to talk about, and focusing my attention on one or two narratives is always the challenge. Today, I want to focus on the copper market. I've become increasingly bullish on the renewable sector, and I'm looking for different angles and how to play it. I think, I've settled on sort of the copper nickel angle. It seems like the most predictable. And I want to get your thoughts on this. So, you published some content this week on the copper market. I think the title was "The Copper Bull Market May Just Be Getting Started." We've hit high prices that a high since 2013. So what's your take, Frank? Are you bullish?
So many guys that are good newsletter writers have been so bearish on it. And Jay, when I speak at your event every January, I usually bring in a few minutes about PMI and the significance of following Purchasing Manufacturing Index, because it's a leading indicator. The GDP is looking to be high. And I'm a big believer that government policies are a precursor to change. So that's why we track monetary and fiscal policy, and it's so key. So what do we have? Last year, we had roaring PMI. China was on tear, Europe was on a tear, the US was on a tear. That means above 50, means expanding, and that means good demand going forward for the next 6 months. China basically falls out of bed. It has its worst drop in 30 years. And then the US has its drop, its massive drop, like 2008, going to that period. And with that, you immediately saw the pumping coming on. The pumping came out of China first, then the US, and then it was this amount of money going out, and you had this MMT being practiced. Modern monetary theory is being practiced, Jay, in all the countries around the world, but differently. South Korea is different than the US, is different than Europe. But the fact is they're using monetary policy to stimulate. And you really can understand PMI when you understand the money supply connection, and you saw the surge happens in China. Boom, it's over 50. Oh, what's happening here? The US is slowly climbing out of its lows. And then we're out of them, and we're expanding. So this past couple of weeks, the US reports almost a 57 PMI. I mean, that's just ripping it up. China comes out at 55. Now, why is that important? Because China and America is the biggest trading bloc in the world. And when they have robust PMI like this, it means big demand for copper. Where's the supply coming from? It means big demand for iron, for steel. It makes big demand also for oil and gas. It's the pickup. Silver. You start seeing platinum, palladium. So it's really interesting. We've done all this correlation analysis going back 20 years of looking at when PMI last month is above 3 months or below, what are the ramifications for copper prices? Well, those numbers are just a home run. The only drag right now in this global footprint is Europe, and they're under 50. It means still contracting. But bad news is good news, because they're going to go out with another $1 trillion green money. Guess what? Green bonds, green money, that's just phenomenal for copper. It's also great for silver, but in particular for copper. Now, copper has something else that's really unique to it. Supply side. Supply side is shrinking. It's shrinking because it's disruption because of the virus impact around the world, or strikes in Chile. And third is grade. Grade has been shrinking and shrinking and shrinking, so they can't get this volume to give you the amount of copper. But now we have the money machine printing. China consumes over 53% of the world's commodities. Their PMIs on a tear, US on a tear. Guess what? Copper trades much higher. $1 trillion going to green. Biden's going to come in. He wants to spend a lot of money on green, another $1 trillion. You're going to have to double, as BHP says, the supply of copper to meet the green trend in the next 30 years. He's going to have to double. It's not there.
There's a lot there I want to unpack. And actually, I want to back up a second just to get back to the PMI, because you reference PMI frequently and have for a while. We're talking about the Purchasing Managers Index, which, if I understand correctly, Frank, and correct me if I'm wrong, gives you, it's like a 6-month leading indicator, right, of commodity demand at a relatively high level. Now, my question for you is, what's more important, the number or the trend? When you're looking at PMI numbers from different countries, what are you paying attention to?
The number is most important when it's above 50, because it means your country is expanding its economy. And after that, the most significant number is the last month is above the 3-month average. When that trend is in place for global PMIs, it's the best for commodity demand. And now for listeners, what does it mean? Well, they call up companies and say, are you getting demand? Oh, yes, I've got to make 50,000 new copper motors. You do. That means I'm going to have to use more energy short term. I'm going to have to order lots of copper. I'm going to have to hire people to build these motors. So that's very robust for the next 6 months to deliver that. And then the next month, guy calls and he says, now I got 100,000 motors to make. And then I've got 200,000 motors to make. That's what gives you that rising trend that's very significant to commodity demand.
Okay. Yeah, it helps me understand the significance, because a 6-month leading indicator is something you can action, right? That's near-term action. Okay, now we touched on copper, and I've become quite bullish on copper. I wanted to share this with you and get your thoughts, see if you're going to poke holes in my thesis and tell me I'm early, I'm late, whatever. But it seems like the number of drivers, whether it's inflation / a weak dollar, economic growth, growing PMI numbers, or the renewable energy trend, there's enough catalyst that could be very bullish for copper. So out of those, or something I missed, what are you paying the most attention to?
Well, I think there's no doubt, and we got to remember, Jay, supply. Any type of disruption in supply, you're going to get a spike in any commodity price. Right. And this sort of quick fix by the G20 finance ministers and central bankers around the world is print the money and just get it into the economy somehow, some way. And the fact that how fast they do this is a big game changer, and that real assets like copper, gold, silver, they're all going to take on a new dimension in this next wave. And take a look, some of the smart money is telling you this, because Capstone's up 174%. Freeport, the biggest copper gold porphyry deposit in the world, well, it's only up 140% this year. That's not bad. One of my favorites is Ivanhoe Mines. It's up lagging those two big animals. It's up 93%. But if I looked on a relative basis to reserves and grade and did a computation, I think Ivanhoe gets taken out by the Chinese in the next 18 months, and it's got to be double this price where copper prices are. And plus they have the Platts Reef coming on.
Okay. Yeah, I was going to ask why Ivanhoe was your favorite. You see it as a takeout target. That's why you've circled it. Okay. Now, when you look at so yeah, and it's interesting and difficult for gold investors sometimes to apply their thought processes to the copper market, because the business model is different, specifically when you look at the end game, right? To take a gold deposit, put it into production, takes a certain amount of cash, certain amount of time, then you get 10x that for a copper deposit, right? Plus the suitors that might buy, there's a couple hundred in the gold market, junior producers, mid-tiers, big caps, in the copper market is, what is there, 7, 8, like there's not a lot of players, right? And so it can be a mistake as a gold speculator to apply the same lens to copper. What do you think about that? Any advice for gold speculators looking at the copper market?
Here's this interesting studies from years ago, and it repeats itself at the peak of every cycle. You could buy copper gold porphyry deposits producers. That is, they have copper and the byproduct is gold. Like Freeport-McMoRan is a copper mine, but it's a massive gold mine for how many ounces they throw up as a byproduct. What happens at the beginning of the cycle is you can buy the copper, gold, porphyry companies and copper stocks a lot cheaper on a cash flow multiple basis than the gold stocks. But at the end of the cycle, when everyone's just hurting in here, they go to the same multiple. So actually you can make more money on a copper gold deposit than you're going to make on just a pure gold producer. It's hard to believe it, but I can show you these cycles. And interesting enough, Newmont and Barrick, they're big copper producers. That's like 30% of that cash flow. And so the most important part with the quants look at those two stocks is their revenue per share growth last quarter over 4 quarters, their cash flow last quarter over 4 quarters. Are they aligned? And if they're throwing out free cash flow and they're aligned, those stocks get bid up quickly by the non-gold or commodity investor.
Okay. Okay. Now, you referenced a statement that BHP made earlier this week, and I think you covered it in an article you put out. They've come out stating they expect current trends. I think it's mainly renewable energy is what they referenced. Again, correct me if I'm wrong, to increase copper demand by 100% over the next 30 years. They expect demand to double. And you touched on the supply crunch that you see. So if we're focusing on that renewable energy trend as the main driver, can you identify any main obstacles, any blind spots that we might have that would slow that progress down, Frank?
Just government policies. And I think if you get any problems with countries that impact supply, copper trades higher.
Okay.
Those stocks, you have to take a look at geopolitical risk. When you look at those companies.
Okay, then I want to jump onto that. What countries are leading the charge when it comes to the renewable energy transition?
I would probably think in a big way is the Congo and how fast that Friedland's been able to get his massive high-grade deposit developed without any difficulties. And I think it's going to become very stable because of the huge Chinese influence, and that they're building railways and building new infrastructure to take it into this century much faster. So I think that's a surprising country. Zambia, great copper, but it's such a dysfunctional government. They move the goalposts all the time, what they're going to tax, what they're going to do, etc. So that makes it difficult. Maybe the sleeper is going to be the big copper gold porphyry deposits that are here in America. I know that some smart investors have been buying them privately and banking them, like Robert Friedland. He's been wherever he can get his hands on, been doing it, accumulating. And I think when you go through countries like Colombia, if you have a big copper gold porphyry deposit there, I think they're going to become much more interesting. And in Canada, it's going to be once again government policies.
Got it. Got it. So you're talking about the supply countries, and when you look at demand, Frank, like when it comes to creating demand off the generation of renewable power and the storage of that power via battery technology, is China leading the herd here just based on population and momentum?
Well, they've had such a pollution problem that they have to. I mean, it's a big issue that Beijing, how bad it was, and it's improving. This year is much better than last year and substantially better than 5 years ago. So I think that there's policies in there to push for green energy wherever they can.
Right.
And try to stop coal. And so what will that thought process will be? It'll be wind farms, solar farms. I think they're just going to grow in countries like China. Got
it. Okay. Now I want to pivot.
I want to share with you. If you go to West Texas, drive out to West Texas, and it's like a country movie. And you see the tumbleweeds coming across on the highway. But when you look at the right, you're not going to see cattle. You see huge, humongous wind farms for miles and miles and miles. And
right.
Guess who put them in? Exxon.
Right.
Exxon. So there's been a couple of times now in Houston that electricity for the day costs nothing because of the surplus electricity that's coming from the wind farms. So I think that the success of that allows itself to grow across the nation.
Got it. Got it. Do you ever see opposition to those wind farms vocally, Frank?
Yeah, there'll always be some extreme greenie, and it comes out of noise and the birds, concerned that birds fly in and get killed.
Sure.
You've seen that more out of Europe. In the offshore facilities they have, I think in Denmark, there's been concerns for that. But I've not really seen it here in Texas.
Right. Okay. Thank you for that. I appreciate, and I appreciate your thoughts on the copper space. Now I know I said I.
But the renewable, you can't forget. I love copper. Love it.
Yeah.
But you can't forget silver, because the big driver is not just the riding on the warrant on gold. It's solar panels. The solar. Who's the biggest solar company? It's China. Guess what? They're importing all this silver. They need this silver. So part of that whole renewable of going to solar farms and going to wind farms, well, you're going to need copper and you're going to need silver. And then the other magic ingredient is going to come along is nickel.
Okay, there it is. Yeah, and as I understand, I mean that seems to be the most sustainable ingredient in battery technology. And when we look at like renewable energy tech, like it's still new. I think we're just getting started, right? Battery storage, like still battery technology storage, still new. Just getting started. Whenever you have some kind of new tech like that, in order to attain mass adoption, there's going to be pivots along the way because you're going to hit roadblocks, right? Take cobalt, for example. Cobalt was a key ingredient in battery tech until we discovered it was really difficult to get your hands on. And so it's been engineered out in some capacity, right? Lithium, turns out, is in abundance. Maybe it's not the smartest angle to play this market.
Yep.
Nickel, however, strikes me as probably the most predictable and safe commodity to play if you're bullish on battery technology. Do you agree with that, or what do you think?
I agree with you. And that's something there's been very little exploration in the nickel space, where a junior mining company is just focused on nickel and nickel deposits and re-engineering, looking at the exploration, the latest techniques to explore for it.
Interesting. Okay.